Hi everyone, welcome back to my channel. If you are a beginner planning to invest in the stock market in 2025, this video is your starting point. India's economy is growing at one of the fastest rates in the world. Post the 2024 elections, the government has doubled down on infrastructure spending, digital India projects, renewable energy, and manufacturing. Globally, while many markets are slowing down, India is standing out as a bright spot, and this creates a golden opportunity for beginners to start investing in quality stocks. Hey, wait a second. Before we dive into the video, make sure to hit that subscribe button. That way, you will get notified whenever I upload valuable finance content. Alright, let's jump into the video. Now, here's the catch: most beginners rush into trading, think it is the quickest way to make money. But the truth is, long term investing in strong companies is what actually creates wealth. Think of it this way: if you had invested just 10,000 rupees in Infosys back in 2010 and held it patiently, that money would be worth multiple times today. Trading might give small gains here and there, but investing is what builds life changing wealth. So in this video, I will break down everything you need as a beginner in 2025. We will discuss what makes a stock beginner friendly, which sector to watch this year, actual stock examples to study, and most importantly, a simple strategy to start with. By the end of this video, you will feel confident enough to start your investing journey. Before we jump into stock names, let us understand the basics. What exactly makes a stock beginner friendly? The answer is stability. Beginners need stocks that are predictable and less volatile. You want companies with strong fundamentals, that means stable revenue, consistent profits, low debt, and a proven management team. Bonus point: if the company regularly pays dividends, dividends are like pocket money from the company to you, the shareholder. For beginners, large cap stocks are the safest. These are companies with market capitalization above 20,000 crores. Think of HDFC Bank, Infosys, Reliance. They are established, widely followed, and less likely to collapse suddenly. Mid caps are the next category, companies that are growing faster but are slightly riskier. Small caps are the riskiest. They can shut up or crash very quickly. As a beginner in 2025, your focus should be mostly large caps with a few strong mid caps. Here is a quick example. Suppose you are choosing between Infosys, a large cap IT leader, and a small unknown tech startup stock. Infosys may give you steady 10 to 15% growth every year with dividends. The small startup could double in a year or crash to half its value in months. Beginners cannot afford that roller coaster. That is why starting with large cap companies is safer. Now let's talk about the sectors where beginners should focus their attention in 2025. First, banking and financials. Banks are the backbone of the economy. Every business and individual depends on them. India's credit demand is growing and digital payments are booming. HDFC Bank and ICICI Bank are strong examples of safe banking stocks that beginners can study. Second, IT and technology. With artificial intelligence, cloud computing, and global digital transformation, IT companies remain highly relevant. Infosys and TCS are industry leaders that continue to bring in stable revenue from international clients. Third, FMCG and consumer goods. These are companies whose products people use daily, from soaps to toothpaste to packaged food. Demand is always present. Hindustan Unilever and Asian Paints are shining examples. In fact, Asian Paint has dominating in the paint industry for decades and no new competitor has been able to dethrone it. That is the power of a consumer monopoly. Fourth, energy and renewables. India is moving aggressively towards renewable energy. Solar, wind, and EV infrastructure are going to be huge. NTPC, traditionally a power giant, is now shifting into a green energy. Adani Green is another big player in this space, though beginners should be careful with volatility here. And fifth, pharma and healthcare. After the pandemic, the world recognized India as a pharmacy to the globe. Indian pharma exports are growing rapidly. Companies like Sun Pharma and Dr. Reddy's have global footprints and consistent growth. So, as a beginner, these five sectors banking, IT, FMCG, energy, and pharma are your starting universe for stock picking. Now let us look at some actual stocks that beginner can consider studying in 2025. Remember, this is not financial advice but examples to help you understand. In banking, HDFC Bank is a solid pick. It has one of the strongest balance sheets, wide customer reach, and consistent profit growth year after year. For beginners, it offers stability and reliability. In IT, Infosys is a great choice. It has global clients, regular dividends, and decades of experience. It may not double overnight, but it compounds steadily. For FMCG, Hindustan Unilever is perhaps the most beginner friendly stock. Almost every household in India uses their products, whether it is a soap, shampoo, or tea, that ensures stable long term demand. In consumer goods, Asian Paints is another gem. Think about it. Every new home renovation or shop needs paint. This company has dominated for decades and still continues to grow. For energy, NTPC is interesting because it is transitioning into renewables while maintaining its power generation dominance. If you want a bit more growth with some risk, Adani Green is also an option, but beginners should keep their allocation small. And in healthcare, Sun Pharma remains a leader. It has international presence and strong research capabilities, making it a consistent long term player. Now, here's the key, don't just memorize these names. The idea is to study why these companies are beginner friendly, they have strong fundamentals, reliable demand, and good management. That is what you should look for when picking any stock. Instead of depending only on videos or tips, let me give you a simple step by step checklist. Number 1, strong brand. The company should be something you know and see around you. For example, you know Hindustan Unilever because you literally use its products daily. Number 2, consistent profits. Check if the company has been profitable for the last 5 to 10 years. Number 3, low debt. Companies overloaded with loans are risky, especially in uncertain markets. Number 4, fair valuation. This is where you use simple metrics. P by E ratio tells you if the stock is too expensive compared to its earnings. ROE or return on equity shows how efficiently the company uses its money. Debt to equity tells you if the company is drowning in loans. You do not have to memorize complicated formulas, just check these basics on Money Control, Screener.in, or the NSE website. Now, how should beginners actually invest in 2025? One of the best ways is to do a SIP in stocks. That means instead of putting 50,000 rupees at once, you invest maybe 5,000 rupees every month in the same stock. Over time, this averages out the buying price and reduce your risk. Second, always diversify. Don't put all your money in one company, have at least 4 to 5 stocks across different sectors. For example, one bank, one IT company, one FMCG, one energy, and one pharma. This way, even if one sector underperforms, the others balance it out. And third, adapt a long term mindset. Do not expect quick returns. Think of 3 to 5 years minimum. This is how compounding works. Even Warren Buffett, the world's most famous investor, made most of his wealth after the age of 50 simply by holding long term. Let us also cover what not to do. First, avoid penny stocks. Just because a stock is priced at 10 rupees does not make it cheap. It might be cheap for a reason. Maybe the company is drowning in debt or has no real growth. Second, avoid hype stocks. Many beginners get tempted when they see a stock trending on a social media or when their friend says, buy this, it is going to be double. Those tips are dangerous. Third, don't panic. Stock will go up and down daily. Beginners often panic and sell during a dip only to see the stock bounce back later. Patience is your best friend in investing. So to quickly recap, in 2025, beginners should focus on large cap companies from stable sectors like banking, IT, FMCG, energy and pharma. Stocks like HDFC Bank, Infosys, Hindustan Unilever, Asian Paints, NTPC and Sun Pharma are examples worth studying. Remember, the secret is not just knowing the names but understanding why they are strong. Start with simple analysis, use tools like Screener and Money Control, invest systematically through SIP, diversify across sector and always think long term. Avoid penny stocks, avoid hype and most importantly, avoid impassion. Now I want to hear from you. Which stocks are you planning to buy in 2025? Comment below and let me know. And if you found this video helpful, make sure to like this video, subscribe to the channel and share it with your friend who is just starting their investing journey. And thanks for watching. See you again.